Hello and good afternoon, everyone. Hi, Rahul, Umang, Vivek, Anuj. Welcome to this exciting discussion. My warm welcome to all the attendees here. Very excited to have you here. Also, a very interesting day. Yesterday we were the first country to land on the south pole of Moon. Today we're thankfully talking about global. Hopefully, we'll talk soon about universal expansion as well. And by the way, tech companies are already going to the solar system from India. So hopefully we'll do another event on that. But very excited. Thanks to all the attendees for joining this, and my warm thanks to all the panelists for being part of this. We have an exciting 1 hour today, packed agenda. Hopefully, we will cover all the questions that we had planned to do in this. Just to give you a broad overview of what we plan to accomplish today, I'll spend about not more than 5 to 7 minutes on the opportunity which is international for Indian tech companies. We've done a lot of work across organizations helping them go global, not just tech, but also traditional domestic companies. What is it in it for Indian companies to go global? I'll spend some time about on that. A majority of the time we'll spend on the panel discussion, so about 45 minutes. There are 7 very exciting questions, which you want to cover, and of course, after that, another 10-15 minutes, we'll open the house to the audience for questions to have live, to talk to the panelists. So just to kick start, let me introduce to all the panelists. We have Anuj here, who's the founder CEO of LiveSpace, ex Google, Pepsi. We have Rahul, co-founder at Zetwork, ex Blackbuck and Schlum. Umang, co-founder Car Deco, Ka Gadi, and ex web app ABP Accentium. We have Vivek, founder and CEO of Medica Bazaar, ex Amra Renal Care. Warm welcome to all of you, and excited to have an interesting conversation today. Just quickly about Praxis, I won't spend too much time, but we are very proud to be India's fastest growing homegrown consulting firm. We work across private equity, internet, financial services, consumer, and healthcare companies. International expansion is one area where we've done a lot of work, taken a lot of Indian tech companies as well as non-tech companies global. So just I think some pages which I want to show before I open the house, for the conversation. If you look at India's economy, you have the top 6 cities, Delhi, Bombay, Bangalore, Chennai, etc., the usual, which contribute to 40% of GDP. And interestingly, the rest 400 cities contribute to only even less than 25%. The concentration of economy is so strong in top cities. Whereas if you now take this and you look at countries apart from USA, Japan, UK, and India, the top 2 to 3 cities actually end up contributing almost 50% or plus of the GDP of the entire countries. As there are only 5-6 large economies, and beyond that, all countries' economies are concentrated around 2 to 3 major urban clusters. Also, if you look at it, the Indian sort of neighboring economies, which is GCC and Southeast Asia, are growing extremely fast. They're able to, in the next, by 2027, we expect them, GCC should be a 6 trillion economy. Southeast Asia will be a 5 trillion economy. They'll be the third largest actually economies if you compare to now, and they behave in a very cohesive manner. Also, if you look at a lot of our neighboring countries, they enjoy extremely high GDP per capita, especially if you look at GCC countries, or internet penetrations, or a very high middle class population, very high smartphone penetrations, like countries in Southeast Asia. Also, if you look at it, the internet and smartphone penetration is extremely high, almost 100%, as much as a lot of the developed countries, especially in GCC, and very fast growing and almost reaching the same levels in Southeast Asian countries. If you look at overall Southeast Asia, including India, it's expected to be a $550 billion digital economy by 2025. Of course, e-commerce is going to be a majority contributor to this. If you look at GCC, it's going to be a $70 billion economy. Again, e-commerce being a very big contributor to this. Also, another interesting thing, if you look at launch of Amazon, how many years they've been operational in these countries. Look at how many sort of years Uber has been there, e-commerce penetration, digital payments. A lot of these countries are 5 years behind India, and they are where India was 5 to 7 years back. So they are at the right cusp of a very large technology revolution, where all the categories get disrupted and technology penetrations will rise fundamentally in the coming years. Another interesting thing, we are probably the second or the first most populous country in the world, no surprises. A lot of these have very, very high concentration of Indian diaspora, which has a huge implication, not just on ability to set up operations, but also on the ability to actually build a brand and attract consumers, because a lot of the tech companies that have gone global, the Indians have been the starting base of consumers, which they've rode upon. And with that, no surprises. A lot of companies in the last 5 to 6 years have grown globally. We have a couple of representatives here, on the panel to talk about, but I think the whole opportunity on digital, the innovation that they've done on the consumer side, also some sort of policy measures and support, and also the capabilities on tech and operations that we have built, has helped us, grow and succeed in a lot of these geographies. Of course, there have been success stories as well as stories which have not turned out to be as expected, and the intent today is discuss all of them and help companies who are thinking to go global plan their journey. We've done a lot of work across all these geographies, helping companies expand. We worked across categories within tech internet as well as non-tech. We have proprietary toolkits experience and deep internet experience, and a very proven, offering toolkit to help companies go global. With that, let me orient and kick off the panel discussion. There are 7 major questions, which we want to focus today, and of course, as the conversation matures, we'll sort of open up more topics on conversation. First is, what is in it to go global? What impact does it have on the business, on the valuation? How do investors perceive this? Is there an inherent top line, bottom line benefit? Is there a valuation benefit? What is it? Why are companies going global? Second is, how do you pick the right geographies? There's you could go Southeast Asia, GCC, North America, Western Europe, LATAM. We've seen countries, Australia, go across the globe, right? But how do you select the right geography that suits your business, right? What's the right process? The third question is actually pretty deep. We'll spend a lot of time on that. Towards how do you set up the operating model, right? How to set up the org, how to set up your overall offering, how to set up the tech stack, how much can you tweak basis what you have in India, what's the right operating model, how to focus on categories, how to create the right customer journey, and how to avoid a lot of pitfalls and failures early, right? So that you're able to enter with the right proposition quickly. The fourth question is, what's the competitive advantage that Indian companies can create, right? And that might differ by GCC, Southeast Asia, North America, etc. But and how do you compete with the offline or the traditional, which you're sort of bringing online? Fifth is very important. Do you do it yourself, or do you actually acquire a small company and ride on the back of a small team? How to think about inorganic? When is inorganic and M&A the right way to enter that market? And even if not inorganic, what sort of partnerships can you create so that you're able to kickstart the operations there? Now, we've also seen a lot of forays that have not turned out to be successful. So what are some of the challenges that you might face while scaling up international business on the people, tech, process side? How do you avoid those? And then finally, if you've decided to go global, how should you create the 3-year, 5-year plan, right? About selecting the geography, building the team, setting aside capital. When do you know it is the right time? How do you create the international mindset and the culture in the organization? So these are the 7 questions. I would like to kick off. On the first question, let me actually start with Umang. Umang, you of course, Kar Dekho is forayed across a lot of international markets. Would love to know from your perspective, why did you folks think about going global? What's the value? And yeah, on to you for the first one.
So Aryaman, I think for most of us who are sort of looking to go global, I think the big reason for it is increase your TAM. Right? Effectively, we've got a certain TAM and certain opportunity set that we're addressing in India, and the more markets in which you're able to successfully replicate that same model in other geographies, it helps you significantly increase TAM. There are other tertiary benefits in terms of economies of scale, replicating that same tech platform and competitive advantage that you have in other geographies. That said, what I will also sort of caveat the whole thing to say is it's very industry specific. If I'm a SaaS company, I think from day one, you should be thinking, I want to go global. Whereas if you are more of a fintech company like us, it's a fairly different sort of approach that I would say, does it make sense for us to look at another international market?
Got it. And Anuj, what about you? I think first with LivSpace going to GCC, Southeast Asia, multiple geographies, how do you think about that?
I mean, I think nice to meet everybody, and I think Umang sort of hit the nail on the head. I think I would say even more than the TAM, you're trying to actually find SAM pockets, which is demand that you can service and address, assuming that your first cut model in your first core country has actually proven right. So if you recall, and I've spent, of course, time scaling LivSpace in multiple geographies, but before that, spent like almost close to a decade at Google. And I remember scaling out one level more and among like more fintech products as well. And I completely agree with you. Scaling fintech products across geographies is an interesting sort of beast. But with the experience that I sort of have over the last almost close now to 15, 17 years, I think it's important to sort of understand your core business sort of deeply. And I think driven out of our experience, Aryaman, the business, it's a three-way managed marketplace. The capability to organize and digitize the supply chain is sort of an important ecosystem value proposition that really is the fundamental reason why LivSpace worked out. It's a complex category and it's very fragmented. So when we looked at sort of the international opportunity, I think even at that point in time, LivSpace was primarily a metro company. I think we were in 3 to 4 cities, and we were proving out our product market fit in the new home segment. So our take was that let's exhaust new home segment in those markets which are India and India-like. And I think India-like is a very important characteristic. So I think when you say global, for me, I read India-like. And I think that's where really we've worked out well. I mean, there are reasons, and you guys at the work, we chose not to be in Thailand. And we've chosen, at least for good time and good reasons, not to be in Indonesia as well. And there's a reason largely why, because markets, surprisingly, Singapore might at the onset appear exceedingly organized. But it matters to us because we seek a lot of fragmentation in the market, absence of brand, ability to build high amount of product margin, the salience of the value proposition. Of course, large TAM pockets are obviously great, but as long as those TAM pockets actually are yielding a fairly attractive SAM in the short term that actually dovetail really well with your core market capabilities, then markets like that will be interesting to us, right? So be it Singapore, maybe a little bit of Malaysia, I think we're still trying to learn. But definitely most of the markets, the Gulf, Dubai, Saudi, etc., you guys at the work on Saudi, those markets actually, sort of yield fairly comparable results. Now, plus minus, whether we will make X% margin or X minus delta, time shall tell. But I think that was sort of the rationale for us when we looked at expanding the core outside India.
Got it. And Anuj, does it create any benefit? I mean, if you're a global firm, on how sort of, you're valued as a business because a lot of international markets, so 2 questions. One, like, what's the kind of impact on the inherent value of a business, right? And that is one. And even if a lot of companies are thinking about going, IPO, etc., of course, people in this room have not gone that journey yet, but, does it create the right sort of, aura around the company, right? That is one. And 2 is, how do you draw the trade-off between going deeper in the urban cities of India, right? But a lot of time the questions are that, you're only there in, not you, I mean, a lot of tech companies are only there in the top 20 cities, right? Why not go into the next sort of 50, 60 cities? That's also a 300, 400 billion GDP, right? Versus going to 2 other international cities. Like, how do you draw that trade-off, right? And when is the right call versus to go global or go deeper into Indian markets?
Maybe I can take care of the second, which is a continuation from what I was sort of trying to say.
Yeah.
See, firstly, hand on my heart, like it's almost like, and this is probably true about all of us, like doing the first or the second city after the first city is like rebuilding the business all over again. At least that was true for me. And doing the first country outside your first, the second country outside your first country is literally like rebuilding the business all over again. So I think these are like bold tasks. So I think sort of a word of advice and caution is to, really, really go deep in terms of establishing with a lot of humility and self-awareness, just having a good idea on the playbook and things that worked and things that are unknown, may work, may not work. I think it's always a good idea. So I think, and to be fair, like I think that here's how we made the decision. So our take at that point in time was that we really did not have, Aryaman, the product margin construct to be able to drive the right economics if we were to go to the next tier of cities. And we felt that our playbook essentially appealed to folks who were sort of in the middle class, upper middle class market segment, metro users, really valued the proposition that we were articulating in the market. And so it was a call for us to go deeper down or copy paste the same model in a city that actually looks fairly comparable to like a Bombay and so forth and so on. Of course, having said that, right now we are like in, I don't know, 50, 60 cities in India and multiple countries outside. So at that point in time, the simple answer is that, yeah, our platform product market fit scores were relatively modest for tier 2 cities. We just did not have the product margin construct. Over time, we figured it out. And I think now we have a flourishing business in tier 2 cities in India. So that's pretty much how we essentially went about it. The first to answer the first question here, I think ultimately, I think we are all at the stage wherein, X number of years from now, we're all thinking of some kind of a, liquidity option, shareholder value creation, be it trade sale or, sort of listing in the India markets or outside somewhere or consortium and whatnot. My observation is that, yeah, if India is the listing destination, that I think, maybe 25-30% of the business coming outside, but if you place the business on an Excel sheet, then it should exhibit exactly the same characteristics, right? So as long as Singapore for me or Dubai for me and so forth and so on are exhibiting comparable growth rates and fairly comparable unit economics and long-term steady state EBITDA profile, yeah, then it's fine. And I think the market believes that while the core market is India, but there are other India-like geographies wherein the similar model is extending, there is adequate TAM, so you can grow for several years at a decent pace. But more importantly, the market is actually yielding good quality revenue. So it's very attractive unit economics. Long term, there's actually, you'll generate fairly healthy cash flows. I think as long as people conclude that these extensions are actually yielding not only TAM, but very importantly, very high quality TAM and high quality revenue, then yeah, people will give you India like multiples. I mean, it's pretty logical. I mean, if you look at some strategics, and we've done some work in this, I think there are strategics like, Asian Paints, for example, Pidilite, and many others, like even outside my market, which actually do have 20-25% business coming from outside India. But my observation is that their businesses are equally attractive and viable and profitable in markets outside. Hence, when they list in the India markets, the markets actually tend to reward them, So I think that has been the learning, thus far. And I think that's the ethos with which we are sort of building our international plan. And to that extent, if the feeling in the company, Aryaman, is that there are companies which may or may not yield that kind of attractiveness in sort of the mid to long term, I think we may choose to starve them, as opposed to unnecessarily expand the company. I think that's the learning thus far.
Got it. No, Umang, I'll come back to you. Just one or two follow-ups on that, and Rahul, I'll come to you after that. Is there also does going international also make the business more stable? Does it make it more insular to, let's say, global sort of economy ups and downs? I mean, last 5 years we've probably gone through everything, right? We've gone through COVID, we've gone through like 2 recessions, right? Just probably last 20-25 years, it's been the most exciting for 5 years, right? With the whole US election, all that, so many things have happened, right? I mean, does being multi-geography actually help you, become more insulated as a business? Two is, a lot of the countries among that you work in, Car Dekho has much better ease of doing business indices, right, compared to India. Of course, India has improved a lot in the last, 5 to sort of 10 years. Its ranking has really improved, but still we are far behind a lot of geographies that you are in today. So is actually doing business easier, right? I mean, versus going deeper into these countries, not just about the TAM, but also, working with customers, handling on the ground sort of realities, issues, those. And thirdly is as you go like one country versus the other, is there any synergy between different sort of international markets that you might play in, right? I mean, you're there in Philippines, you're there in Indonesia. I think you do some, fair bit of work in Malaysia as well, right? If I'm not wrong. So, Mangsu, what is, are there synergies between these countries, or do you see them as different, businesses? Like, how do you think about that?
Again, Aryaman, I think it's very contextual in terms of our business, because effectively we are building a used car finance or an auto finance aggregator in each of those markets, the regulatory environment, the business environment in each of those markets is quite different. And to an extent, beyond our process playbook and maybe our tech platforms, and even those aren't exactly applicable across geographies. You have to sort of treat each market as discrete. Uh, Unfortunately, I don't have a single product that I can just cross sell everywhere. The product has to be sort of co-designed for every market. My supply has to be co-designed within each market because I'm dependent on local financiers for the same. Unlike maybe, if I was selling a product across geographies or selling a SaaS product across geographies. So I think fairly contextual in our case as far as for us, each market we have to build it out separately. And there's no real benefit I get from, in Indonesia, we've crossed a $500 million of annual loans. We do over $50 million revenue. We've not seen any benefit of our scale in Indonesia when we've entered Thailand right now, or when we're looking at any other kind of geography. Quickly to add a small point on, the last question that you had asked and you were discussing with Anuj, we've just spoken to over 30 public market investors, right? And from a Cardeco perspective, from an IPO for next year, etc. And unfortunately, what we've seen with public investors is this deep skepticism on the ability of tech companies to execute outside of India in consumer facing or fintech like opportunities. They are willing to give you brownie points if you're software, SaaS, etc., and you're looking at that this thing. And I think until real case studies of success don't sort of come out, that's not going to happen. The second thing, Arman, I've just gone through a full fundraise process for our Southeast Asia entity, and you'll hear some announcements later. But the kind of investors who are investing in India are not the same who are investing in Southeast Asia. For private investors, also, the capital pools that are looking for India or who have been allocated capital to invest into Indian markets, the ICs don't overlap with folks who are investing in Southeast Asia. So there are very few pools of capital where you will be able to get a common investor who is allowed to invest across both geographies. So I actually have not seen huge benefit of saying, let me raise from investors who are focused on the Indian market and go with a global play. And time and again, when we did our last large private fundraise, that time, the Southeast Asia business was under 5% of our overall revenues, right? So at that time, it was too insignificant. It didn't get valued much. Today, when it's north of 25-30% of our overall revenue, uh, people are sort of looking at it fairly seriously. But then the question comes, hey, when will this get profitable? So, while we've had the benefit of 10 years in India, we've probably had the benefit of only 2-3 years in that market. So I hope that gives more context to your first question.
Yeah, no, I just one just small follow-up to that, Umang, and in terms of the inherent value of a business, and maybe I don't want to know more about, I mean, not Cardeco, but generally, like as you spoke to investors, right? The same kind of top line in, let's say, Southeast Asian markets, or let's say GCC or non-Indian markets. And is there a valuation benefit, or do you actually end up losing value, right? If you
You
could have,
lose value.
you lose.
Aryaman, the Indian stock markets and the depth of the Indian stock market is, and now that I have seen it very closely, discussed exit options in great detail with everybody, I am in awe of what is happening in India. Genuinely, your stock markets give you the best PE multiples in the world. So if you're looking to create value and list on a market outside of India, most stock markets do not have depth, right? You're better off listing in India, where the domestic mutual funds in India today are to a large extent driving value creation, etc. Or you have to get really, really large when a Nasdaq or a US listing becomes a real opportunity. But that you need to be at least a $5 billion, otherwise
But
there
if
is no
you
value.
don't need to list, let's say you're raising private capital, like I mean, do these markets command the same kind of revenue multiples for the same type of business, or is
They don't.
they don't?
It's lower.
You won't.
Southeast Asia is lower. I won't, again, it's not one size fits all for all markets.
Yeah.
But Southeast Asia, the multiples will just logically be lower because growth rates,
Growth rates are lower.
size of exits, etc. All
Yeah.
of those will sort of factor in ultimately as far as that's concerned. More critically, the folks who specialize in India are different in any of these private investors from the guys who are specializing on Southeast Asia, evaluating Southeast Asian assets.
I agree. Yeah. And
Got it.
long-term growth prospects, EBITDA creation, yeah, I think what the point Umang is making, that's really sort of what is probably factored in. So you
Yeah.
step back and then
Yeah.
suddenly start looking at picking up whatever metric you want to pick up. But
Yeah.
on a given day, logically, you would expect multiples to be slightly different.
Right.
Anuj, honestly, our unit economics in Southeast Asia are way better than India because
Yeah.
the underlying economic pie is much more available. The issue is the domestic mutual fund investor in India, the public
Yeah.
market investor in India, does not have the time to evaluate an asset in that much depth and detail to try and understand economics in multiple international countries and
100%
then
agree.
ascertain and give value for that.
Yeah, 100% agree.
Oh, Mike, there's a reason Amazon was like -1 +1% EBITDA margin for like 10 years, right? Because like I think scale, the incremental benefit you get by pushing scale rather than profitability is much higher. Anyway, let me move to Rahul. And Rahul, you might have a very different view because more B2B business. You're not in. I mean, you're there in Southeast Asia, of course, but you're very big in your US and North America, very different kind of markets. Two questions to you. I'll also move to the second one with you, but one is why did folks think about international, how do you like, why not India, why, of course, that one question, why go global, that's one. And two is you've gone really, you have variety of businesses, right, in Zetwork. You have FMCG, contract manufacturing, you have steel, you have energy, etc., right? How have you created the right go-to market or geo strategy, right? For, hey, we'll go to this geography, and you have synergies between some sort of synergies, right? Operating synergies between different businesses, but you've still chosen to do different geographies for different lines of business, right? So first is why global, and second is, more, I think if we spend time on that one, that how did you create the whole geo strategy, right? And how do you think about this country, this business, and how do you pick them?
Yeah. So B2B business work very differently. It's very difficult to make money in India if you're a B2B business. It makes obvious sense for us to go to US and Europe because the margin profile that exists in US and Europe is far, far better along with the TAM. So you make it in India and sell it in US, it's just amazing margin,
Yeah.
even being an intermediary in between. So the manufacturer makes good margin in India, we make great margins, as well as there is the US guys were very happy because they're getting cheaper material.
Yeah.
Other than that, what forced us beyond this was also the opportunity that existed right now. There's a lot of momentum and a tailwind in the market with the China Plus One strategy. A lot of customers in US, Europe, and few other countries are looking out for suppliers beyond India, beyond China, and they're looking at India because India has a very large workforce, has the ability to produce goods at large scale, which make it cost competitive. And hence, it was also a function of opportunity. Though we were already there, but we did not get the uptick that we wanted when we were out there. But soon after the China Plus One and post-COVID, the uptick in the whole demand from the Western economies helped us grow. So two main reasons: one, opportunity, and second, TAM and margins. Now, that was also the reason we decided to go to US. US has the maximum amount of consumption for industrial goods or for consumer goods. So you ideally want to be in a place where you really don't have to worry about growing. And also to attribute to what others are saying, actually in the B2B space, markets do value US dollar revenue far more than Indian rupee revenue. So if you are a manufacturer in India exporting, your valuation is far higher than being a manufacturer in India and only manufacturing for Indian companies. So there's definitely a arbitrage in valuation, which is on the upper side. And that is one other reason we never went to Africa or Southeast Asia. We did go to Southeast Asia, but not for demand, but for supply. Because the demand is too less for industrial goods out there. They're actually economies who are producing. So for us, the source economy, which was consuming, became the ultimate destination. And that's why we decided to choose US and Europe, and primarily US, because it's an economy which is still at least so large that you can be a nobody at $1 billion revenue as well in US.
Yeah. And Rahul, I mean, you just one follow up on that. See, you've, I think across the lines of business, you're in different geographies, right? So, I mean, how did you like, one is like how you launched multiple markets, right? You launched multiple geographies. So, like, how do you pick the right geographies for each? So, I mean, some of them US is obvious, right? US is the largest geography for like sort of, any possible category that you want to play in, right? But beyond US, like, let's say you like really cherry pick some certain geographies that you have in your fabrication business, etc., right? Which I'm aware of. So How do you do that? That's one. And two is the public market valuation, which is, of course, so I think very different. B2C companies, India, mostly a consumption-driven economy, right? B2C companies are disproportionately valued. I completely agree with Umang and, Anuj. But B2B, yes, the story is a bit different, right? We ourselves are a B2B business, so, we know that. But anyway, but I think the valuation arbitrage, even in private capital, and is there an overlap of investors? Because I think you also have a lot of global sort of US-based investors as well as India-based investors, but you do operate in Southeast Asia as well. So, how does that work out?
So in terms of geography, I think one, the TAM and the opportunity was one reason, and another one was reducing the number of variables. If you know the operations, then you want to at least do the same operation in another country and only function on culture and tech. If the tech is not changing, probably you can be variable on operations and people. So you figure out how you can reduce the number of variables while optimizing for TAM and margins. When you're launching the first new country, because new experience completely. In our case, operations were always in India. And then for us, the demand had to be figured out along with the customer experience. So we limited the variables to two rather than having three variables at the same time. And that probably was one of the reasons we chose US open economy. And also we're in a different world, right? B2C works very differently than B2B. There's a lot of compliances and law that comes into picture when you are sailing in international territories. So you also want to be in a place where you understand law. You don't want to be in a place where you start selling something and then you're struggling trying to figure out how the law will react to what you're doing. So US made absolute sense with respect to law, TAM, margins, and the reduction of number of variables and talent availability as well. There's this abundant talent available in US for any kind of thing that you want to do. So reducing number of variables along with what you want to optimize was the reason. In terms of capital, I think there is value for international revenues, specifically US, and that's true for even SaaS businesses. If they're selling in India versus US, they definitely get valued more because figuring out US GTM in itself is a very difficult thing. So if you have cracked that in itself is a value prop, and that means that you can scale so much more in a territory which is so much bigger than India. In our case, we definitely got a benefit of it. Our investors are majorly US based. They are more than excited for us to come to US because for them, it's an expansion of TAM more than anything else. And definitely helped us out in terms of our latest fundraise as well.
Great. No, thanks a lot, Rahul. Vivek, I think apologies for the delay. Let me move to you. Spend too much time on the first 2-3 questions. I think, Vivek, we know that, Medica has built a pretty fast growing business based out of GCC. I think you're also looking at a lot of other countries. One, how do you pick the right geographies? What's the mantra to success? And I also want to move to the third question with you. You're also, depending on the type, you're B2B business again, right? How do you set up the org, right? How do you set up the operating model? How do you set up the sales team? How much is domestic? How much is international? How much do you hire locally? Right? How do you set up the tech? How do you set up the operations in the country? If you can spend some time on both these questions. Yeah. Vivek, I think can't hear you. Maybe you want to just unmute.
Yeah, is it okay?
Yeah, better, but I think you probably will need to be closer. Yeah. Lost you again, Vivek.
Is it okay now?
Yeah, much better. Yeah, can hear you.
Okay. Thanks, Aryaman. Thanks, Praxis team, for inviting me here. And it's really nice hearing to Umang, Rahul, and Anuj as well. And also picking up some perspectives on what they are doing. But before I come to your question, I think briefly, let me tell you about healthcare in general and what Medica Bazaar is doing. I think it's better to understand the business a bit before we can talk about it. So as the synonymous with name, and we are the largest B2B market place for medical supplies. We built something very unique in India from a B2B medical supply perspective. I come from healthcare, worked across markets before setting up Medica Bazaar, so I know exactly what challenges we were facing. In fact, healthcare market globally has seen a lot of challenges during COVID. We have seen over the last 3-4 years what challenges essentially across markets. We have seen, in fact, a lot of challenges across markets like US or markets, what we have seen across Africa, GCC, and just leaving those challenges apart, we need to really understand the two basic, kind of challenges across healthcare market. I think the first challenge comes with the regulated and unregulated kind of market scenarios, where you can understand that there are challenges which are relating to your regulated market scenarios and unregulated market scenarios, and the other one is largely across. I would say across push and pull factors, right? There are certain natural extension of healthcare market scenarios where you can see a lot of pull factors for players like Medicavs are to be attracted to those markets, but there are certain push factors also which may not be as lucrative as what you can really take up from those markets. So in India, since we had seen that initial success and we had been able to build a profitable business model, by the way, but by design of our business, we never had the challenges of making margins in the business. COVID was a big support in the overall business model. But when we realized and we thought of extending our business to GCC market or moving to certain, kind of natural extended market situations, we had our own initial set of challenges, and it's not been a great, I would say, experience across different markets what we have seen. So we had been across maybe UAE to Saudi to Kenya to markets like Egypt, and we had seen certain challenges coming out from there. Now, coming back to how do you build your business across markets which are not as big as India. In India, you have such a large healthcare story existing. You have beds of 1.5 per 1,000 population, roughly about 5 or 6 per 10,000 population. And you have such a large opportunity where India is just ranking around 155 over 167 countries in Human Development Index. And you know that there is a lot which can happen in healthcare. But you have markets which are like it's spending maybe 10 or 20 times than per capita spend in healthcare. And they are very big in terms of healthcare spending. But you need to build a model out there. Though the pricing is attractive, you have better margins. But how do you really scale up in those markets? How do you build up your product fit in those markets? Because your natural extension of customers are not there, because in India predominantly you have a private healthcare market. You have more than 75% share in private healthcare, but you have markets like GCC where your public healthcare market, your government spend is very high. How do you really scale up in those markets is always something, what really has been challenging, and what has really either worked in favor or may not have worked in favor in certain markets across. Now, from the question which you asked in terms of how do you scale up in terms of organization, in terms of tech, in terms of your team building, I think it has to be a fairly mixed, kind of approach which has to be taken. Maybe you have to think global and act more local, or kind of understanding more of local flavors there. So it has to be a mix of all those opportunities around. I think culture makes a lot of difference. You have to understand what the local culture is, what are challenges associated, what could possibly go wrong along with regulations, what are local labor laws. So we had to learn all of these initial challenges. Also setting up the right framework in business, the right structure in business, whether you are trying to build up something outside India with an international holding, or you are trying to build up something outside India with an Indian holding. I think what Umang rightly mentioned, and he has seen that public market quite well in India, you always need to maintain, and we always wanted to maintain that holding entity in India, because we also have an aspiration to go public, and we certainly want these opportunities to work in our favor. So we also need to work certain structures around that. How do you build such international kind of holding entities? How do you build more so structures which are much more flexible for the business and all of it? And also, on a relative note, how do you extend your such experience around hiring team members, maybe taking certain people from India initially to build those markets, and then essentially building up local team around there. So all of these played quite a significant role in terms of understanding and in terms of building those markets. So I'll take a quick pause here and then
No,
Over to your next.
one or two specific questions, Vivek. I mean, let's talk about, let's say, the country head, right? I mean, local individual experience in that geography or sending someone from India, right? What's the right decision? Because this is a very critical call, right? And does it depend on the category? Does it, what does it depend on? How do you, like, what's the right answer here? Second is, what percentage of team needs to be local versus, send, hired Indians, non-Indians, etc. Because of course, every market has different cultural sort of, ramifications in working, right, in those countries. And third is like, what is like, how much of the technology stack, right, do you need to, let's say, change, right, or adapt to a particular country, right? And how much of it do you need to change, and how difficult is that, right? You're more B2B business, you don't have the too much of the B2C side ramifications of payments and CAC and all that, but even on the core tech stack, right? I mean, if you're sort of working, and one and two sort of more specific questions there.
Sure. So let me also break down your question more or less based on the structure of the organization. I think somewhere in certain functions in the organization, I think it depends on what essentially you're looking at. So you can have maybe certain function with maybe an Indian leadership, or you have certain control from Indian leadership, but certain functions or certain areas in the business, say for example your regulatory area in the business, or something which has to do more on business development side, has to be more of the local flavor, right? You cannot always think of putting people from India and thinking them to be successful outside India. I think that's where it makes some difference in the setting up the overall org structure there. And when you are actually thinking of setting up your technology team, your product team, I think that's where it makes some sense for getting skilled workforce from India, which could be just a natural extension of what you have set up in India and you have built out there. And obviously this can play in your favor because you know exactly which product extension, what could of product, your natural stack or whatever, technology stack can really work in terms of market opportunities outside there. But when you're thinking of, kind of extending your business, or when you're thinking of hiring your local business talent and all of it, I think it has to be a fairly good flavor of your local, guys and local people out there. I think that's how the balance has to be drawn in terms of hiring. There is no single formula out there. As I said, that healthcare is very regulated business.
Yeah.
For us, it worked that we have about 60% of people from there, right? And maybe 30-40% people from India. And then we extended in those markets which were just a natural extension. There were quite a large Indian diaspora out there. So actually getting some 30-40% Indian people out there really helped us. But again, we understood that we cannot just live with that, because we need to have that local flavor in place, and we had to hire a lot of people locally. Now, we also have certain supply markets, maybe in China and in other Southeast Asian countries. There we have more or less complete local team, right? Where you don't need a lot of technology and product hiring to be done. Then you have to have maybe 90%, maybe 100% local team. In China, we have 100% Chinese team. We also have a China entity, by the way. So basically, it's a mix and flavor, Aryaman, and certainly there is no one single formula out there, but it has to be more business specific. It has to be opportunity specific out there.
And since you're already talking about entity, I mean, do you have a point of view on what's the right entity structure? Is it like a group company? Is it like global needs to be, India needs to be parent, global needs to be parent? Or because this also, by the way, has a huge impact, right, on how you raise capital, how you employ people, right, and how you sort of list, etc. All of it. Is there a right answer here, or what model works for what?
So many businesses would essentially think their ownership structure outside India. I think most of the businesses were flipping their ownership structure to maybe Singapore or US entities and all of it. We never did that. As our business, we always felt that India was the place to be. And I was always a true believer in India's story, because I worked across Indian market before that. I worked with Tata's, I worked with Nestle, I worked with some leading global corporations also. In fact, the business, my last business where I was working was acquired business. So I really understood that that being completely ingrained into India was important for us, especially knowing that India healthcare market was bigger in size and growing phenomenally well. And so we built an organization more India centric and moved to create international holding under a Singapore holding entity. And we created 100% Singapore holding entity, and we built all our businesses under Singapore holding entity. And that's where we created one structure that all our international businesses will be Singapore holding entity, and we will have an India parent company. Because somewhat what what Umang was mentioning, that they are raising fund for Southeast Asian market. We are more centric, to understand that if we have to raise fund for maybe future expansion, we need to have a clear structure of ownership and all of it. So I think it has to be more business centric. What you just mentioned, it has to be more on aspirations also. If you are a SaaS company, like and you always want to remain in India, that may not be the right answer. I may not be the right person to tell you whether you can build business outside India or you have an entity ownership outside India. That could really work in your favor. Maybe Freshworks is an example which has really proven to be building a business, incredible business, having its ownership outside India. I think that's what you have to really think about. What kind of business are we building? Is it that too much of local influence on the business, too much of your I would say local opportunities around, Indian opportunity around? I think those businesses will have to be ingrained in India, and you have to build that structure around that.
No, thanks a lot, Vic. This is pretty helpful. Anuj, let me come back to you. I think you'll have a very different perspective to this, given more B2C business, and I think you're also, I think, more tech in the B2C side, given your B2C, right? And how do you set up the team locally? And given in your case, there's so much of a customer experience component as well, and I think for Medica at the end, it's a more enterprise relationship. There's not so much of local nuance to there, but at least in your space there's a big impact, right, of who's the interface talking to the customer, and that too it's such a large AOV transaction, right? So how do you, what's the right strategy for setting up the op model, and how much of the tech stack did you have to change, right? How difficult was it, because you also have a core engine, which creates the whole order book, etc., all of it. How much of a customer journey do you end up having to change if you're a B2C business, especially if you're as engaged? And any again implications on the sort of legal structure, what works, and GCC, you have a very different format, right? And we'll of course talk more about that. But over to you, Anuj.
Yeah, sure. I think again, no one size all fits the answer. So probably I can talk a little bit about from my personal experience, and then really, if you think of, I think our organization, the framework that Aryaman exists, and you know about this, they're regional go-to-market teams, and you can argue that actually has a city-based existence, and we kind of treat a country in some sense like a city first, so that it conforms to that customer experience model. So within that, you could break it down into the demand generation, which is an important problem, because I think while you're sort of figuring out the playbook, there's a certain type of demand generation that actually works well for probably all our companies in the early days. And you used, while digital has its misery, and given that I'm a AdSense product manager, I would still lobby heavily in favor of digital, but sort of early in the day, because digital eventually will kind of catch up and your CACs will go up and so forth and so on. But it really helps to understand the ability for a growth marketing manager, or whoever sort of running the digital campaigns in these, their ability to actually essentially, or whatever is the preferred format of demand generation, that how local is it, or how scalable is it, right? So to be honest, frankly, for us, what was local was the ability of the team, and I'll sort of go one by one along with faculties. Demand generation being one, because it's really important. If you can't figure that out, you might as well not sort of go up. So we really did a lot of local work in trying to understand which is the customer segment that essentially has a high trust for digital mediums, be it Instagram or Facebook and so forth and so on, or Google, YouTube videos and so forth and so on, who essentially will trust the digital medium for its ability to actually provide, or their ability to discover, a trusted experience of the nature that we provide, right? So for example, in Thailand, there's very limited amount of activity freaking in principal e-commerce, let alone them buying a high AOV infrequent experience like mine. So it's a ding yaar immediately, correct? So when you start looking at sort of those kind of characteristics, you're able to qualify, and it, like the ability for Canvas, which was a business that we eventually bought, was a very ready indication of the fact that consumers are exhibiting discovery, on some online platform in very high degree of numbers, and then the digital platforms are actually in some way or shape or manner able to provide a trusted sort of supply side partner, which was a very strong indicator for us to look at that market and say, hey, at least there is a principal primitive behavior that already exists, but I can build on top of that. So demand generation, the knowledge was local, and I think we all worked together on that. But the fulfillment eventually, once when we figured it out, was actually central. It was all run from India. The customer experience, which involves whatever it involves, is really local. Yeah. People value the one-stop shop, proposition in our case, and the ability for the design agent and the design partner to be able to provide an as needed in-person experience is just vital. It's not that the system doesn't work. The system can absolutely work on its own, but the presence of a local economic agent really underwrites the experience, provides a lot of confidence. So it's really the need of the market. No matter what you can do, you will have to make sure that you're able to provide that in-person experience, an omni-channel experience, but you are also able to then articulate the right value proposition for that, third-party designer who's now coming to your business. So it's very important to understand that the construct of that agent and their economics and how it sort of works out. Yes, supply in our case is hugely varied, from the smallest installer to subcontractor to large brands like IKEA to contract manufacturers to OEMs, yada yada yada. There are some relationships at the OEM level and the brand levels that tend to transcend geographies. I mean, IKEA is a trusted partner. We have a joint venture with their operating entity in the Middle East. They're also a minority investor. So our relationship with them at that level goes very, very deeply. Saint-Gobain is also sort of a small minority investor, also a vendor partner. And I think we've generally demonstrated that such capabilities will transcend geography. So it obviously helps because you get significant amount of relational reputation, but potential of margin actually coming to you as well early in the business. Plus, in the case of IKEA, for example, or we've recently announced a partnership with the Landmark Group through their home center brand in the Middle East. And such formats actually allow for trusted demand generation early in the days. It's a very low CAC, no CAC kind of a model. So you're not sort of burning capital initially. So as long as you're able to look at these no CAC, low CAC models, the ability to get some decent margin in the days, which allows you to underwrite your unit economics early, I think that and making the right sort of decisions, local or platform level decisions, I think are extremely helpful. I think last but not the least, on this one, the technology platform, Aryaman, works as is. I don't think much changes. But one thing which we really learned it took us time to understand that the flow of goods, money, and information is very different as you cut across geographies. So the ability for a platform that was actually built for those kind of use cases in India will absolutely deliver the value proposition to the extent that the mapping of goods, money, and information is absolutely right for the regulatory setup of that country. That needs help here. It needs to be understood. So that was a learning.
Got it. And there are two specific questions on that, Anuj. I thought I'll just ask right now. One is, as you're going across launching multiple international markets, I mean, do you have like a common launch team and then have a business team run the country separately, or both need to be same? I mean, is there a right answer here? That's one. And two is, like, I mean, in KSA, etc., right? I mean, the local partner model which you need, right? I mean, does it work? Do they co-invest? Do they sort of bring more sort of leverage to the business? Is there a pretty big investment, to run business in KSA, or it actually works out fine?
I mean, at the market level, at a very simplistic level, I sort of break it down. So let's say there are markets which are India-like from a jurisdiction perspective. They feel like India. They're English markets and so forth and so on. So the ability for us to actually extend very quickly, and the local entropy ecosystem is such that you can actually work there, and they behave in a certain predictable manner, as opposed to very new geographies such as Saudi and so forth and so on, wherein the markets are new and the audience demographic and the ecosystem is relatively new for us, and the cost of a wrong decision could be sort of high. So I would characterize them into two such markets. But if you take that sort of on one axis, and on the other axis, the type of sort of central plus local, the model that has always worked well for us is like a 1+1. So it's 2 to tango model, wherein you will have central capabilities that essentially understand the playbook. They've done this thing many times over. They may have not worked outside India, but they may have actually at least worked on several new cities and new demographic and whatnot. So there is an appetite for, new stuff and playbook extension. I mean, over time now, because we've done it a few times over, I think that capability is, of course, central for us. But we've always, and you know that we've always had a head of the business unit initially work closely with the central team and then subsequently sort of take over from that. This is what happened in Southeast Asia. This is what we did in the Gulf. The only difference in the Gulf was that because of the nature of the geography, and frankly, our inability to actually understand it as well as we can understand Singapore or America, you know, Rahul, in your case, they just tend to be slightly different. I think in that case, it was just helpful for us to go in with a partner like IKEA as an IKEA's operating entity. The format in that case involves, you know, it's a joint venture wherein, of course, there's a certain sort of ownership structure. Both of us are investors into that model. So both of us as balance sheets are investing into that geography. And for all practical purposes, we are sort of treating it like a Series A and a half business. And we're bringing both of our capabilities in addition to sort of money, leadership, and other relationship network that we can introduce to the success of our business.
Right. Anuj, since I'm with you, I'll just ask one more question, you know, and then Umang, I'll come to you. On M&A, you know, and, you know, I know, of course, that's one topic very exciting, you know, and very sort of, you know, which you'd love to talk about. Yeah, of course, a lot of these markets sometimes don't have supply of assets, right? Because they're fairly nascent. But given assuming there is supply, right, and you have some options to acquire and build from that, you know, what is inorganic generally a good route? Are they able to integrate in your India businesses? I mean, are the valuations decent enough? Are the teams hungry to grow, right? I mean, what's your point of view on that?
Yes, and yes. If I could do it all over again, and I kid you not, I still remember going back to 19 or so, when we sort of started to imagine, you know, sort of a world outside India. I think going back to that, you know, we actually made the recommendation to acquire two kind of companies. The one we did, and the other one we chose not to. If I could go back in time, I would actually acquire the other one as well. So and it just gives you so much legs, like the ability for, and again, the assets, I think, to Umang's point, for the fact that these are different geographies, the assets tends to be well priced here. So to the extent that you can actually find an entrepreneur who still has a significant amount of energy left and wants to grow with you and so forth and so on, I think as long as those parameters of acquiring shareholder value outside the core jurisdiction exist, I would say we should look at it aggressively. Of course, I think we were also relatively, you know, we were sort of a young company at that point in time here. So our ability to go outside and acquire two companies straight off the bat was marginal. Eventually, we learned our own model, but I think if I could go do it all over again, and if I could find the type of assets that generally do well, whether it's on the demand side like Canvas or on the supply side, direct to consumer private label side, I would definitely recommend and explore that process. It just saves so much time and the ability to actually learn about a new market.
Umang, I'll come back to you. I think we're sort of also nearing the sort of close time. You know, two questions. You know, one is, of course, you know, you've also done a couple of M&A activity outside in Southeast Asia. You know, I mean, you know, is there good enough arbitrage? You know, if you're thinking about M&A, does it help? Or how much does it help you accelerate? You know, like just, I mean, if you're getting a 20, 30 people team, right? Are the teams hungry enough? That's one. Two is, like, what is there a mother all answer here that, hey, if you're just generally the Indian sort of work harder, the more hustling, etc., nature of, you know, people, etc., is there a competitive advantage intrinsically if you're an Indian business going, let's say, to Southeast Asia or GCC, that you can command? Like, do tech companies give you more competition? Do offline businesses, incumbents, you know, give you more competition as you enter the market? Like, how do you sort of compete with them? Those two questions.
I'll take the first question, which is the M&A piece over there. And again, I think I'll split that into what we classically do, an acqui-hire, like a sub-$1 million hire, which are largely doing for team or this thing. That tends to be much more tactical and contextual where you do it. And I would always recommend, you know, just like Anuj said, if you get someone with the entrepreneurial energy to go build in that market, great. The second piece that I will say is on a larger acquisition. I think, and I have seen this as a issue, right? Our ability to genuinely evaluate the stickiness or the long-term sustainability of that business in other geographies is limited. And, you know, it's not easy to exactly figure out. So really, it's a function of price. It's a function of where you're coming in, whether it makes sense or no. So, you know, you still have to be fairly careful about what you're doing. You know, smallish acqui-hire like acquisitions, I don't think you need to think through too much. But The minute you're starting to look at slightly larger size ones, you need to do your fair bit of diligence as to, hey, what the hell are you getting into, and don't get stuck somewhere down the line in the whole piece. In terms of the competitive dynamic that we've sort of looked at in this market, and auto tech is hot, right? We've got competitors out here in slightly differentiated business models. So we are more of an auto finance aggregator. The others are more doing used car buy sell, which briefly was an extremely hot business model globally for the better part of the last 2 years. So we've seen more competition come from tech players. But funnily, this also worked out well for us because of the global meltdown of that whole used car buy sell model in geography after geography. Today, the same players who sort of raised capital are under the cosh. Most investors don't want to touch them or even look at those companies because of the kind of global headwinds for that specific industry. So, I've seen that go both up and down. But that said, even today, a lot of the competition that we do face is from other well-funded or companies that have raised Series A, Series B within the tech space. And out there, the competitive intensity is definitely not as high as India, right? I mean, I think India has got clearly a notch above in terms of competitive intensity, but it has its own sort of challenges and dynamics operating in a lot of these markets out here.
And Umang, going back to your previous point, I mean, there will be inherently a very strong arbitrage in valuation, right? I mean, of what you valued as a business in India, and if you're acquiring a Southeast Asian sector, because the valuation generally will not be of any asset that you're acquiring as high as they would be in India, right?
Aryaman, if you're talking about doing equity swap buyouts, not the easiest things to sell to offline players. And if you're doing equity swap buyouts, you're typically then buying out assets that are probably a little under the weather or have their own sets of issues there. And when you start to talk cash buyouts and cash availability to do a large transaction, then of course there'll always be a valuation arbitrage. Believe you me, there'll be that valuation arbitrage in India also on those assets.
Yeah, no, correct. With scale, they will be correct. No, fair enough. And Rahul, let me come to the closing part to you, and we're also towards the end of time. So, two questions. One, of course, I don't know how much M&A Zetwork has done. Probably, not too much that I'm aware of. Maybe you want to share your perspective on inorganic. If you've done, why? If you've not, then why not? Is it about supply of assets or what? And two is, you've been to a wide variety of geographies, right? Southeast Asian, GCC, North America, probably all different types of animals you have, touched and experienced. So, what are some of the biggest challenges that you faced, right, in these international markets? And what is your advice to tech companies thinking about going global? How can they preempt those and just better prepare for them?
I think the M&A strategy for us works a little differently. One, of course, is a strategy that everyone's deploying, where you find a subscale asset where the entrepreneur still has the energy to grow, and you invest in the company and grow along with them. That is one way. Whereas when we entered US, we ended up acquiring a company which was our customer for 3 years. So we were supplying to them and they were supplying to our end customer. And one common thing that we have found is find an entrepreneur who might not be young but very old but has no inheritance left. So he's ready to sell his business. And you really take it up because you've been working with them for 3 years. You know the team very well. You understand how they work. So all the challenges around culture, business model are all solved for. And that's the way we tend to acquire companies in newer territories. More the comfort of people rather than anything else.
And you also have this philosophy of not doing a buyout, but maybe doing a controlling and that, I mean, have you done that internationally as well, or what's the...
Yes. So for example, when we are expanding to Saudi, we are doing the same strategy where we are taking up 75-80% of the company on day one. We're setting up a new entity and getting a new entrepreneur on board who gets 20% stake, but he doesn't put in any money. And we keep on putting in money to grow the business, whereas he comes from Saudi, has the experience, can build a team. So he sort of becomes a pseudo CEO and an entrepreneur with very high amount of skin in the game. But the difficult part is finding such individuals and then creating a success story. We have seen few successes, but a startup in a way becoming successful is still 3-4 years in making. So we really have to see how successful we are in executing it when we start doing it far more in international territories. So that is probably the one thing that we look out for when we're doing M&A, more comfort of people, and how can we reduce the number of variables. We already don't know demand, we already don't know the operations, we at least know the people out there, and we have past history of working with them. So if together we can figure out those variables, it's better.
Got it. No, thanks a lot, Rahul. There are one or two questions which I'll just open up to the panel, for closing remarks. We have one question from Saurabh, which I think is not answered. So actually, he has two, three questions. One is, if you're looking at countries like more mature countries like Europe, UK, Germany, France, etc., what are the barriers to enter and grow there? Second is, within these markets, how does M&A work? They have typically very compressed EV multiples. Are they good hunting grounds for acquisitions, mid growth sort of companies? What could be the right GTM strategy for these, type of markets? If any one of you wants to take that up.
I can probably answer because we've been trying to enter Europe for quite some time, and we haven't been able to enter. I think the multiples, as Umang said, are not really different. Once you go out for a cash deal, the multiples tend to be around same because they are private companies, not listed, so they're a discount over the public company multiples. And they are actually supplementing their cash flows, that their yearly cash flows will be discounted, and they assume that to get the same multiple that the world will give them. And equity swap is definitely very, very tough for offline businesses in any shape and form. For any kind of business which is completely bootstrap, making money, to give them an idea that they will be able to convert that cash into equity and then leverage it out later is very difficult. But M&A is a great strategy in these places. There are a lot of small businesses in Europe. The only problem is identifying them. There's so many towns and villages where these businesses exist, that if you are with the right mindset and your business only becomes finding those small companies, you might be able to succeed. That in itself is a business unit or a business idea. That's what we figured out. Otherwise, the way we have been able to figure out GTM in Europe and other places is by hiring locals. Definitely not having anyone from India trying to solve for things out there, because the familiarity of language, familiarity of culture, and the nuances of sales operations really matter to the local individuals out there. And really, we as Indians, as networkers, don't feel that we are capable of doing that. So generally, hire the people from the local background and keep on trying and twisting until you figure out few customers and inbounds.
I'll add one piece on this, Aryaman, and it slightly refers to what we were discussing just before this, and I think an aspect that we sometimes miss. We entered Indonesia through a partnership with one of the largest family houses out there, right? One of the MTech Media Group. They actually invested $7 million. We invested just $2 million, right? And that's what got us up and running in Indonesia early on. We later sort of gave them an exit into a parent, equity swap exit into the parent. But what some of the companies are doing with trying to find a local founder or someone who can help you build out the business, to an extent that can also be solved by getting a local partner who invests equity into the business. B, it helps you through a lot of regulatory loopholes, other legal compliance loopholes in a lot of those geographies. And if I look at a lot of companies who have much more experience than us Indians in terms of going global, and I'll take Japanese companies as an example, right? Most Japanese companies, when you see them operating in markets across Southeast Asia, they will have local partners who have co-invested with them in a lot of those geographies. And I think that's one element of strategy that I would counsel a lot of companies to explore. That can you get a local large equity partner to invest into the business in some small way, shape, or form, and give them the requisite rights, etc., that you will exit them into the parent if required, and give them a proper path to exit in terms of the investment.
Got it. No, thanks a lot, Umang. And last question for today, Vivek, I'll just hand over to you. So, what's the right, and I mean, though we sort of done multiple times, but maybe why don't you address that? Then what's the right way to create the entry strategy? What's the right process? There's one question from the group. How do you do the GTM? Right? How do you create the full playbook for entry? How much time does it take, right? What's the whole process? Vivek, I think you'll need to use your headphones again. Yeah, I can't hear you yet. Not yet. Not yet. Maybe Umang or Anuj, you wanna take that as the last question, and then we'll sort of wrap up for today.
So for me to
Am I
summarize the
audible now?
question, yes, you're audible, Vivek. So why don't you take it?
Yeah, Vivek, you're audible. Yeah, no need to market us on that one, but maybe why don't you address that? Yeah.
No, sorry. I think I just a little bit of hardware error today. But anyways, okay. Just to your question, I think Aryaman. So it truly depends on the sector you operate in, on the industry you operate in, or what kind of natural extension you are looking for your market entry strategy. I think it all boils down to doing a lot of homework, understanding groundwork, your customers, your especially knowing the regulations, your culture. Any market entry is a very cost intensive affair. I think we all know that very well. Whether you want to set up a partnership entity, whether you want to set up your 100% owned entity, to your some of your kind of question. I think recently you would be aware that even GCC countries have opened up some of those 100% owned tech entities, right? Even in Saudi, you can go and set up something like 100% owned tech entity. But that does not really solve the problem that you have 100% ownership, whether you would be really successful in those markets. I think what really matters here is, have you done a real, kind of understanding of the local flavor, the kind of business you operate in, whether that business will be really, extendable business to those markets. I think all those factors make a lot of difference. Some of it, which look natural extension from an Indian, kind of business perspective, most businesses have actually not done great in GCC market. Let's also understand that fact, right? Most of Indian, say for example, healthcare businesses, and some healthcare markets, say healthcare businesses which have really done well in GCC have not become very big and successful in India also. The classic example is, how I don't know how many of you know DM Healthcare, which is very big in GCC but really not become really big in India. And on the contrary, you have Apollos and Manipals here, which have not really done very big in GCC. So it all depends on the local flavor and understanding and knowing your market and structure quite well. I think I'll just leave with this closing remarks, but anyone wants to add anything, open for that.
No, thanks a lot, Vivek. And in fact, so me being the pseudo expert on this topic, we've done multiple assignments here. Typically, there is 4 blocks of work that you need to do. One is, big, very deep work on the TAM, which is around different segments, by channels, by product categories, by customer types, right, by geos, etc. Very, very, very important to understand the TAM and SAM of your proposition that you're taking, especially either for B2C or B2B both. Very, very critical to do very deep customer strategy work, where you need to spend enough time on the ground, talking, meeting customers, spend at least 1 to 2 months. The supply is going to be very different from India. So if you're a very supply driven market, if you're e-commerce, if you're B2B, bringing the sellers, suppliers and categories sort of, on board, and which is the right kind of supply you should be bringing. Because in India, everyone is very hungry for business. But if you go to, let's say, GCC, etc., you will be very surprised that people are very selective in the partners that they actually want to work with. They will not just work with anyone, even if they are getting demand. And then, of course, creating the right playbook for entry in organic, looking at if there are any assets of the process is typically, you first do a good entry strategy, you go you do a go, no go decision, you do a GTM, and then you sort of, execute and go to the market. So with that, I want to thank everyone, thank all the panelists, and bigger thank to all the attendees, for being part of this exciting event. We'll, of course, circulate the key takeaways, in email form to all the attendees from this exercise, and we'll reach out to you after that. Thanks a lot, everyone, and hope you had an engaging discussion. We look forward, and thanks, Vivek, Rahul, Anuj,